Hi, everyone. I'm Dr. Gladys David. I am your coach over at She Rises Academy and the founder of She Invests Realty, The Blueprint. I am so excited to be with you tonight, as I am every Wednesday night. Welcome to Women Wealth Wednesday. I do have a light topic for us tonight, but a topic that turn up my volume. Hope you can hear me okay. A topic that I thought of, but then at the same time, you know what? We're going to dive into it. Probably now more than ever, it is important what I'm getting ready to share with you because I'm talking about from paycheck to passive, building cash flow that works while you sleep. How many of you know that now more than ever, it is extremely important to build money while you sleep? I mean, seriously, it is it is a time where not only is it important then, but it's probably more important now in light of what's going on in the world, right? Uh, we have to stay awake and stay woke of what's going on around us, and let's not sleep and assume that everything is okay here where we are living. Not to turn it to anything other than the fact that making money in your sleep is something that we all should be doing, no matter what's going on. But more so now more than ever, you really need to stay on track and stay on point. Why we as women need to do that. Let me just take a sip of my tea. I coach all day, so I want to preserve my voice to hang out with you more so than anything. So let's get into it. Let's get right into it. Um, why does cash flow matter? I asked that question and said, why does cash flow matter? It matters for so many reasons. Um, it can change your life. It can change you from moving from paycheck to paycheck and just having that cushion. They always say we should always have anywhere from 6 months to 9 months of living expenses. But that's very unrealistic with just having our 9 to 5s. And I do preach that we should keep our 9 to 5s while we're building our businesses, right? I'm definitely not telling you to get rid of your 9 to 5, but sometimes a 9 to 5 just is not enough. So that's when building your income, your cash flow is very much important. Now, I want to share something with you about me. I like to be able to relate to you. If you're catching me on the replay, um, drop a replay in the button. If you're catching me live, as I am live tonight, go ahead and hit me with the money bag, money sign, do something. Let me know that you are catching me live. I'm in the studio alone today, and I like it when it's just me and you and us discussing these important matters, because these matters do matter. So for me, I have been in the space that I've been in for over 28 years. And at one point in my career, I was actually a banking professional. And I went from a banking burnout to purposefully building cash flow alongside my business. So a few years ago, I was working at a very popular bank and doing a lot of high management, risk management for the bank. Always been into risk management, looking at high risk accounts and doing a great job at it. Very pressure cooker position because I was always responding to the feds, as they called it. That was my position. That was my role. And at the same time, I was running my business. And running my business in real estate has always been a very necessary thing alongside my corporate life. But one was starting to take over the other, and it was the bank professional. I wasn't just a professional in the space. I had people reporting to me as well. So from the outside, I looked like I had it all together, but I was internally burning myself out. And I didn't want to continue to burn my candle at both ends of the stick. So I had completely forgotten why I became an investor. I was so engrossed in the banking position and keeping up with the demands of the job that, real estate was supposed to be my way out. So why am I letting this one thing consume me? And in the very end, I needed cash flow to flow as better as it can, as quickly as it could, so that I didn't have to constantly rely on my bank job. So therefore, when I was in that banking position, hey Annette, it's so good to see you. Your timing is so interesting that you would come in. I was referring and talking why building our cash flow is so important. And guess what? I was talking about when we were banking professionals and how building our banking job alongside our businesses is absolutely, and here's actually one of my banking professional colleagues from back in the days. It's so important for us to have that cash flow as we are building out our businesses along our jobs, because at one point I found myself at the other end of the stick of not being considered that all-time professional, but being repositioned, as they say, or being restructured out of my job. And being restructured out of that job said, you know what? It's a good thing I had started to build out that investment business of mine, because had I not, it would have completely caught me off guard and blindsided me to the point where it could have paralyzed me. And that's why I'm passionate about teaching women about not being caught up in what we do. We are excellent in whatever field we're in. However, building out that income while we still have that income is so important and so critical, so that we are not relying on that one income. And that's something that I did. So to close with, if you've ever felt like success is costing you too much, your time, your health, your peace, the cash flow isn't just a strategy, it's a solution. And that's what I love teaching women, offering women a solution in what is it that we do as women, so that we can position ourselves. And tonight I have a few points that I want to share with you about cash flow and how we can define it. So cash flow is defined in two different ways. Cash flow can be defined as active income or passive income. Now, those of us who have had jobs and still have jobs, then that is our active income. That is the money that you earn. That's what we call trading hours for dollars. When you trade those hours for dollars, then by all means, that is active, because you trade those hours, and when you finish those hours being traded at one point or another, you will get compensated for the amount of hours that you put in. That's active. And here's the tricky thing. Just like my banking job went away, so did that active income, right? So that income is gone. I no longer have that income. So the difference between having that active income and that passive income and making money while you are asleep is that passive income doesn't require your effort. You do it one time and then it repeats itself, right? We call it mailbox money. And that's kind of what we want to get into tonight. We want to define the difference between the active income and the passive income. And that's very important when we are dealing with that, no longer having that residual of a paycheck anymore, right? So when you don't have that paycheck, you want to make sure that your passive has, if it hasn't caught up to your active income, at least let it be a close second and let it be a runner-up, and you continue to build up that income. So passive income is not necessarily money that you're making and trading your hours for dollars. It is actually, for example, it could be a rental property. It can be an Airbnb. It can be renting a room in your house. So we'll break down how does that passive income make you money while you sleep versus the active income. It could be a digital product. And I love digital products. I have lots of books that I have written and created, and you can make money in your sleep if you have a digital product. Digital product is not about being an expert in your field. Digital products is about taking something that you're really good at, something that you really know, and creating something, and you can remarket it and sell it on the web. And so, some of my books sell for $29, $19. It's a different strategy. But that money, I wrote that book one time and it continues to sell. My book is available on Amazon and that's where it sells, but you can also get it off my website. So there's many ways to make that digital product. You can be good at baking cakes. You can be good at baking cookies. It's not all real estate related. So tonight I'm sharing with you how we are creating that passive income. That's money while you sleep, and you do it one time, but you get paid for it over and over. That's why I like network marketing. When I was studying to get my MBA at one point, my thesis was actually on multi-level marketing, and I think it's brilliant. Multi-level marketing makes sense, and being in real estate that I'm in at this moment, MLM makes a lot of sense. Even though I am not an MLM, I have the opportunity to grow a team. I have an opportunity to grow my business in the residential space besides just being a licensed agent in New Jersey, and besides being an investor, I have the opportunity to grow much more than where I'm at. So that's just a side thing for me to share with you, that your active income is like pedaling a bike. When you stop pedaling that bike and you stop moving, that bike doesn't move. But your passive income, on the other hand, is like setting up a car on auto drive, and that car can drive on its own. So it's definitely something that you can do while you sleep. So definitely let me know, what do you think of building an income, and what do you think of, making money in your sleep? I think for me, it's a great opportunity. I love it. It's awesome. Let me just take a sip of my tea. It's all very much needed, especially in the economical times that we are living in, where you just can't rely on one income. I just saw the job report right before I hopped on here to talk to you guys, and they say that for the month of September, ADP has reported that there was negative 32,000 jobs that were lost. Negative. That means that's minus. That means there are more people out of work than there are more people in work. So this topic tonight for me is probably more so important after seeing that report. And it's funny because I created this agenda before that happened, but it is so apropos and so timeful for what we are discussing. Okay, so let's just touch on this. Rental cash flow equals rental income minus expenses. That's how you know if it's going to make sense for you. So rental income is rent that you're collecting monthly. I said that you can rent a room, you can rent a basement, you can rent a part of a space, you can rent a whole house out. Whatever that rental income is for you, that is exactly what it is. Okay, so expenses. What are your expenses? That's going to be the mortgage payment, the taxes, the insurance, the maintenance, the property manager, etc. Whatever that is. The difference between that is what your cash flow is. So let me just give you a very brief example. If you're earning $2,000 a month in rent and you have expenses of $1,500 all in, right? This is just an example, all in. So your cash flow is $500 a month. So that's $6,000 a year from one property. Now, I know you're saying, well, Gladys, that's not going to save the day. Well, no, it's not going to save the day. However, we did say that this is cash flow. So for those that are still working, an extra $500 a month, let me share with you, $500 a month is a car note, it can be student loan payment, it can be groceries, it can be daycare, or hell, you can just put that into a high yielding account and make the money there anyway. It doesn't necessarily have to be a lot. Now, that's just one property. So over a 12-month period, we're talking $6,000. Now, we are talking exponentially growing your portfolio and your inventory. So multiply that times 2, times 3, times 4. That is what it's all about. It's not just, that one income, but I'm giving you an example of how something so small can be so huge over a period of time, and not necessarily starting out with the big dollars and the big ticket. So it's very important for you to start looking at cash flow as extra money or things that's going to be a replacement of. So you start out with one property, and that's a sample of just one property. Your cash flow could be more. The bigger the rent, the less the expense, the bigger your cash flow. So it's all about how you position and how you want to get it done. I know for me, when I first started out in real estate investing, it was some 17 years ago, probably longer than that, because I wasn't even licensed when I started investing. And you don't have to be a licensed person to do investments. I'm a licensed real estate agent. That's the difference. But I was renting out my I had a 2-family house, and I had a duplex. So upstairs was a 2-bedroom, 2-bathroom. And that was actually the one that I was renting. My mortgage was only $1,200. I was charging $800 for that 2-bedroom apartment. So therefore, that doesn't exist, by the way, here in South Jersey at all. You can't even get a square footage of a studio for $800. So it has been some years ago. However, just want to give you the example that my mortgage being $1,200 and me charging $800, I practically was living in my own 1-bedroom garden apartment for only $400 a month. So that was cash flow that, I didn't have to come up with. When I moved out of that property, I raised the rent for the duplex for $1,200 and rented out the basement for $800. So now, guess what? Instead of me charging the $800 that I was now offsetting my mortgage, I was now collecting the delta. So the $1,600 that I was collecting minus my $1,200 that, my mortgage, because my mortgage didn't go up, it remained the same. So that $400 was cash flow. That allowed me to be able to drive the luxury car that I was affording back then. So just dropping some nuggets to let you know that this is not about a lifestyle change. It's about developing the mindset that you are working on building up your portfolio and having cash flow to help you along your journey. So that when the sticker shock comes of, like I got my sticker shock and I wasn't quite shocked. I was probably one of the few people that walked away unscathed from my position and said, you know what, it's all right. I knew this day would come, and I knew it would come sooner or later. It was a great ride. I loved the job. I loved the company, speak highly of them. However, the time came. Management changes all the time. So therefore, guess what? When management changes and things change, then it's time for you to make sure that you stay awoke and be aware of what's going on in your surroundings, and don't ever find yourself in a position of needing something. It's good to have something, but not be in a need position. All right, so let's continue talking about what is it that we need. I want to give you a couple of points tonight as I'm sharing with you why women need multiple streams of income. Now, they say, well, don't men need it too? Yeah, I'm sure they do, but guess what? I'm not talking to the men. I'm talking to the women. So, excuse me one second. So understand this. It's important that we have the cash flow, okay? Because why? I'll give you a couple of points, and I'll break it down for you, but we need it for financial independence. Women are often caregivers. We're responsible for taking care of our children, our aging parents, those of us that have that responsibility. So flexibility is key. Also, gender wealth gap, that's a real thing. Retirement gaps, that's a real thing. There are huge gender gaps between, and the wealth gap between men and us. And creating a legacy for our children and our family, it's important for us to have that legacy that we would like to leave for our children. And of course, recession-proof your life. I mean, if I gave you nothing else, I just dropped that. Recession-proof your life. So I want to break each of these points down to you and why it really matters. It matters. It matters. It matters. It matters. Okay, so financial independence. Very important, very key. When a woman has her own money, she has options. I mean, that's all it comes down to. Having options makes a difference. She doesn't have to stay at a job that drains her, in a relationship that limits her, or a survival mode. How about that? Financial independence gives us room to breathe, the dream, and to decide what we want to actually look like in this life. Okay. Point number 2. We are often caregivers. I just shared with you that many of us are caregivers we're the primary caregivers. Even when you have a partner, we're the primary caregivers for our children. We become primary caregivers for our parents. And so it's important. We're not just professionals. I mean, we're mothers, we're daughters, we're sisters, we're caretakers. So many of us are supporting both aging parents and raising children. We need incomes that will move with us, not ones that's going to tie us to a desk or deplete our energy. Like I shared with you, my energy was getting depleted at my banking job. So it was time to make a shift. Passive and semi-passive income, it creates the margin we need to show up for our families and ourselves. Okay. The third one, the gender wealth gap. That is real. And so are retirement gaps. Women earn less on average than men, and we live longer. That means we need more in retirement, but we often end up with less. Relying on one stream of income or just a 9 to 5 isn't going to cut it anymore. It's time that we move up in the financial ladder as we should have been. Multiple streams is going to help us build security and grow wealth over time. Number 4, legacy. Legacy building is our birthright. You heard me. I said it's our birthright. You're not building wealth for yourself. You're building wealth for your future. You're building wealth and you're laying a foundation for your children, your family, and even your community. The work that I do, it's not just for myself. I'm the person that transports my children when I'm going out on properties so they can see what I'm doing, what I'm up to. In fact, it's gotten to the point where my daughter is completely, fully knowledgeable that, she knows, oh, it's Women Wealth Wednesday. Mommy's going to teach. That's right. So it's not just about me. It's about what I'm showing my children. Every dollar of passive income is a seed you're planting for your legacy. When you create your cash flow, we teach our children what's possible, especially our daughters. I need her to see mommy in a positive light. I need her to know that, I'm a contributing family member in my own family. All right. And the last reason why we need cash flow. Recession-proof your life. Okay? The economy shifts. Layoffs happen. I just shared with you my journey. I was laid off, which is good. It's all good. I was not too burnt out over it. And I was treated with respect and dignity, so therefore it's okay. But markets change. But when you have multiple streams, you're not shaken. You're not shaken at all. You prepared. That's the power, and that's the peace. Now, so when we talk about passive income or cash flow, we're not just talking about money. We're talking about a movement. It's a movement. It's away from stress, from burnout, limitation, and toward choice, confidence, and the lasting impact. I mean, one stream is too close to none. Multiple streams, that's how we rise. Okay. So ladies, let's talk about one stream of income is too close to broke. We need multiple streams, not just luxury, but for liberation. It's all about liberation. Okay. So it's not a very exhaustive segment tonight, but I definitely wanted to share that with you. I've gotten questions before we got on air. I don't think it's exhaustive tonight either. Let me take a look. I want to read some of these questions that I have here. Okay, so here we go. How do I know if a rental property is a good investment? I like this question. It's a great question, actually. Cash flow formula that I shared with you, right? I said to you, a good rental property is one where your income, your rent, exceed your expenses, the mortgage, the taxes, the interest. The example that I gave you, my own personal example, if I'm collecting $1,800 in rent and my mortgage is $1,400, then the difference is the $400, right? $1,800 minus $1,400. It's cash flow. It has to cash flow. But a rule of thumb is that if you want to earn at least between $200 and $300 in a positive cash flow per door. Now that's investment talk, per door, meaning not every door in a house, but each house that you're renting, each house that you have, that's considered a door. So when someone asks you how many doors do you have, okay, so you should always look at the market and see how the market is there. If there's low vacancies, if there's job growth and population growth are all green flags, okay, that's a good thing. Don't fall in love with the property, fall in love with the numbers. The numbers have to make sense. If the numbers don't make sense, then chances are you're not going to be able to cash flow what you anticipated you were going to cash flow. It has to make sense. If it doesn't, walk away. We do not invest with passion. We invest with numbers. Okay. All right. The next question that I was asked this evening, what's the first step to passive income if I'm starting out from scratch? Start by getting clear on two things. The first is your financial goals. How much money do you want to replace? Now, I know when I said, 2 to 300, 400, that's not going to replace a lifestyle of your income. So that's the first thing. What are you looking to do with the money? The second thing is, do you have time, money, or skills? One of my good investor friends, she calls it the trinity of real estate, right? You have money, skills, or time. It's the investment. So you have one or the other or all three. But whatever it is you have, that's how you decide where you're going to begin your investment, right? So if you're starting out from scratch, the first step you could do is by educating yourself. Read books, take courses, follow mentors. I have Chi Rises Academy. It's the blueprint. We're entering, I believe, week 4. I'm losing track already. Week 4 next week, tomorrow. And that's a mentorship program where women have invested and betted on themselves. It's an excellent opportunity for you to learn where you can get, all this knowledge from, right? It didn't just pop out of a hat. It's actually there, existing for a reason. All right. So that's where you start. You can start from low entry points like house hacking, co-hosting Airbnbs, investing in a REIT, real estate investing trust. That's what a REIT is. I can definitely go into the REITs here, but I don't know if I have time to that this evening. But just wanted to let you know that on a side note, what a REIT is, and I will get into it, because I think it's REIT. A REIT it stands for real estate investing. Real estate investing trust and real estate investment trust. And I'll get into that because I think it's worth a mention, because many people can get into real estate that way. And it's actually a low risk, and it doesn't involve even tenants. Okay. I'll touch on it a little bit. All right. So do I need a lot of money to get started in real estate? Not necessarily. There are creative ways to get started without a ton of capital. House hacking. That's one way. Buy multi-unit property. So instead of buying a single family, I bought a 2-family. So I was able to live in one and rent out the other. Once I moved out, I was able to rent out both. So that's multiply. So you're going to be clearing out more than just the $300, because you're going to definitely rent it out for more than what you're getting for the just the mortgage. Okay, because each unit has its own price point. Partnering, bringing a hustle, you bring in a hustle and someone else brings the money. FHA loans, if you don't own your own home, start out by 3.5%. You're a first-time home buyer. I always talk about that. You are your first investment, nothing else. Wholesaling. I love wholesaling. In fact, there's quite a few people in the program that's their strategy. Wholesaling is actually no ownership. You just find the deals. It's revolving hustle. It's definitely not, sitting back and hoping for the best, but it's a great hustle. You're passing the deals on to an investor for a fee. You never really take ownership of the property. So you don't need a lot of money to get started. You just have to be able to put in a grit hustle that you need in order for you to find the deals. That's all you need. But you do need knowledge, and you do need a strategy and a strong network. And that's really where it comes down to. Other questions that I have here tonight are, what are examples of other passive incomes besides rentals? Okay, so besides rentals, rentals are good. However, it's not the only thing. Outside of real estate, dividends, paying stocks, you can definitely put your money into the stock market, right? And now would be a time for me to touch on that REIT, because the REITs, which is real estate investment trust. a REIT. So let me talk about to you what a REIT stands for. So think of it like, it's a company that owns and operates a finance income producing real estate, like apartment buildings, shopping centers, hotels, office spaces, even storage units. However, the difference is, guess what? Instead of buying a whole property yourself, you can invest in that REIT the same way you buy stocks. That's the good part. That's the good part. So when you're talking about getting into a REIT, you pool your money into that investment. And just like a landlord collects rent, you get a portion of the profits, usually through dividends. That's really good. I have put my money myself into a couple of different REITs, and it's really good. I'm just collecting over a period of time. It's not, anything I'm doing. I just collect my dividends quarterly, annually. It's pretty good. And you can invest more. You can start with as low as $100, exponentially to however much you can afford. So look into a REIT. Now, why are REITs good for beginners? I'm going to give you 4 reasons why REITs, real estate investment trusts, are good for beginners. Number 1, no property management, no tenants, no toilets. I know you like that, but that's really true. I mean, you're just putting your money into something that someone else is managing all the hard work. The second reason, they're low barrier to entry, no big down payment needed. The third reason, it diversifies your investment. You're not relying on just one building or market. So it gives you that opportunity to diversify your portfolio. And the last reason, they're easy to buy and sell, just like stocks. There's a big REIT. I can't think of the name of that REIT. They started out really small, but now they are, oh my gosh, they're here in Vornado. Yes, Vornado is a REIT. They're not small, but Vornado Real Estate started out, I'm looking it up. Vornado started out as a REIT, and Vornado Realty Trust now is, they're probably one of the largest REIT trusts out here. And I'm looking up what their stocks are at this point. They concentrate mostly in the New York area, but they also have grown into Chicago and San Francisco as well. I want to see what their stock goes for now. What's this REIT? Okay, so look, as of today, the REIT for Vornado Trust was $41.22. I'm telling you, it's a low entry point. This is definitely, and they are publicly traded. It's VNO on the New York State stock board. So REITs are a great way for you to get into real estate and without you doing anything. So if that's something you're considering, by all means, go for it. So if you want to get into real estate, but you're not quite ready to buy a property or take on a mortgage, a REIT is a great first step. It's a passive. And that's what we're talking about tonight. It's a passive and it's a simple way, and it's still a way for you to build cash flow. Your investment portfolio can grow from being in a REIT. So look into REITs. All right. Now, if you want to have deeper knowledge and a deeper understanding as to what is she talking about, these REITs and the things I'm doing, I invite you to learn more about me by getting in contact with me, info@coachgladysdavid.com with any questions. If you want to learn more about coaching, then I want you to go to my website. That is coachgladys.com. By all means, I invite you to join our community. Joining our community is absolutely a great place to be around like-minded women, but it's also of no cost to you to be a part of that community. And that's She Rises Academy. It's on school. Let me drop the link in here so that way you are fully aware of how to keep up with me. All right, so let's drop the link, because I would love for you to continue to follow me and share. So here we are. Let me see. Okay, to learn more about She Rises Academy, I want you to go to this. Oops. I want you to go here. Let me get this website for you. For the, it is for Here it is. Okay. So here's the link to join right here. Here it is. So just go on there. I'll drop it here and you can have that there. I'll post that there. And also, to learn more about me and what I do, if this sparked an interest with you, I'd love for you to follow me. I offer coaching there, even though this session is closed out. Okay, so I posted it in here so you'll have it, so you'll be more than aware of what's going on. Okay, so another stream of income we talked about is digital products. I touched on that earlier today. Courses, books, and templates. I mean, it's all great. Automated online businesses. You can definitely take a look into that. Vending machines. Now, vending machines is a great way to build a passive income as well. If you didn't think of vending machines as a way to have it, it is really, really good. That is a venture I have not tapped or touched into. However, it's making money in your sleep. Okay. And let me share with you, having a vending machine in places like random places where you wouldn't expect, the rest stops, I'm in South Jersey. So the rest stops along the New Jersey Turnpike, those are leased spaces. So laundromats, I mean, you can think of endless places. It's not my business, but it's a great idea. If you're talking about getting passive income, then while I talk about real estate all day, getting that passive income is something that you will consider for yourself. A private lending. Let's say you actually have money and you really say, Gladys, this real estate is not for me. I really don't want to get into landlord. And that's cool. You don't have to. But guess what? You can be the lender. A couple weeks ago, we talked about private money versus hard money. If you have capital to lend, why not you become a private lender? Private lenders charge anywhere from 8 to 10 to 12 to 13 to 14, 15% return on their money. What? Banks are not even offering you a good 1%. So if you are coming in less than a hard money lender for loaning out your money and you are good on your return and you're able to complete a project on time, somebody would say you would borrow from that person again. Yeah, you would go ahead and loan that person again. Yeah, you would do that. Why? Because it was profitable for you. So that's also something that you should consider. So we talk about the difference between active and passive income stream. We simplify the rent cash flow formula and why it's crucial for women to have multiple streams of income. I invite you to stay connected with me. In today's session, I spoke to you that you can join me at the She Rises Academy. I dropped the link in here. Check us out in She Invests Realty, the Blueprint. That is actually the course that I am coaching, training, and teaching on. We're building more than just an income. We're building an impact. We're teaching women how to do this and really, really make an impact on their lives. And if I'm speaking to you tonight, then I want you to take this seriously in light of what we're sharing here. So to learn more about the next steps, you can either book a call through coachgladys.com for more information, info.coachgladys.com. That is what I'm here for, to serve you. I want to thank you for being here. You showed up today. One of my coworkers popped into the studio, and I'm so happy that she was able to just pop in for a few and just hang out with me during this period. So I have a bonus for those that either responded to the call earlier and are looking for the guide for building your passive income. I have a downloadable sheet that I will be putting into the community for those that register or emailing them directly. But definitely you want to remain connected and stay connected to what is it that we do in this weekly streaming that we do every Wednesday. I am on Facebook Live. I am on Instagram. No, I'm on Facebook, YouTube, and on LinkedIn. Those are my platforms where I'm doing the live streaming there. You will always find me. Stay connected with me at all times. I always have a guest in here with me, but for the last several weeks, I wanted to really just us so we can get into what is it that we're as women need to do connected. Now, I will tell you that I may not be available next week. I have so much going on in my business, but while we are remaining in these 91 days left in the year, don't sit on the sideline hoping and wishing and praying. There's still time for you to make a decision about what you are going to do with your career and how you're going to incorporate passive income into your life. And again, I shared with you that there were 32,000 jobs lost in the month of September. That just came out. So having a passive income now more than ever is critical for your existence. It's critical for everything that you do. Having something on the side versus nothing on the side is going to make all the difference in the world for you. So I have thoroughly enjoyed us getting together this evening. It's been quick, it's been short, but I will never ever stop giving you the goods that what you need to remain very relative and very relevant in this time and age of building your passive income. It is necessary. It is your birthright. Don't forget. Thank you for being a part of my Women Wealth Wednesday. I am your host, Dr. Gladys Davis, She Invest Realty. I look forward for our chat again. And again, hit me up on any of the links that I just shared with you. I look forward to seeing you. Have a good night.